Bitcoin has jumped over 40% in the last few weeks. Is this the start of the new bull market? How high can it go? When should you start taking profits? And how could you profit the most from this spike up? Today, I'm going to be doing a market update video and looking at some data to answer these questions. So we're going to start off with the CBBI Bitcoin Bull Run Index, which is a real-time analysis of 9 different metrics to help us understand what stage of the Bitcoin bull run or the bear market cycles that we are in. And I like this one because it comprises of all of these different ratios or all of these different indicators, pi cycle top indicator, the NUPL, the RHODL, the Puel multiple, all of these things, right? And right now it's at a 13. So if we go down here, we could see that typically speaking, when we reach underneath 10, so first off, this was a 10 and that marked the bottom back in 2011. Then in 2015, the CBBI actually reached a 1 and that marked the bottom. And even a 3 or a 4, those all marked bottoms. And also we did get a 9 right here, which marked another type of bottom in 2015. And then in 2018, we reached a 2, which marked the bottom in 2018. And then we got a 4, which marked the second bottom or whatever you want to call it. And then up here, we actually reached a bottom back at 14. So where did it reach recently? In November, it actually reached a 2. So when Bitcoin was $16,343, the CBBI was at a 2. I don't know if it actually reached a 1, but it was at a 2. Even at 15,800, it was at a 2. So that was pretty telling. If you were just going off of this alone, yeah, you would have bought because it's under under 10, but realistically, under 5, I want to say, is typically has always been a really, really good buy if it's been under 5. So let me make sure I have that written down. And right now, though, we are at a 13. So obviously we are on our way up, considering that we had that huge spike up. But it's still relatively low, obviously, compared to all the way up, goes to 100, right? So the fact that we are at a 13 doesn't tell us too much, but the fact that it was at a 2 is pretty telling that this possibly was the bottom. It was definitely the local bottom. I mean, that's for sure. But, keep in mind, even though I say under 5 is really like just buy Bitcoin and hold type of deal, it was 4 when it was 18,570. So you would have bought it, back there at 18.5, and then it would have went to 17.5, and then 16.5, and then 15.8. So it would have kept on going down and down and down if you would have only used this, and you would have bought at 18.5. And it's like, yeah, of course, right now, that seems like it's a good idea, but it's still not something to just say, in my opinion, just like go all in. I think under 3 is a pretty good number for the CBBI to just go all in. Just say, like, if it's 3-2, a 3-2 or a 1, then it's like, okay, just go all in and that's it, because pretty much every single time that it reached those numbers, a 3-2 or a 1, that was historically very, very, very close to the bottom. And obviously it reached a 2 or a 2 at the bottom of this cycle so far. The next indicator that I look at is the pi cycle top indicator. Obviously, we're not at a top. We're nowhere near a top. But I do like to look at it just in case, because this did call the first top back in March or May of 2021. And we did end up going a little bit higher than that in November, obviously, and we reached the $69,000 top. But this did call the first top back here. And before that, it did call the top in 2018, and it called the top in 2013, and also in the first half of 2013 as well. So this is a pretty good indicator. Obviously, we don't need to use it right now, but the fact that we are back above this moving average right here, or this orange line, is pretty good, because look right here, right when we went above it, that was the start of the initial bull run, or at least the echo chamber portion back in 2019. And then once we got above it again in 2020, that was the start of the bull run. Same thing pretty much right here. It did fall back below it, so you can't really use that too well. But I do like how we are back above it, and we're going to be talking more about moving averages in a minute, because that actually does show that we are in a more bullish territory. So I just want to move on and go to the MVRV-Z score. What we could see is that we were in the green territory, and I like to start averaging in when we're in the green territory. And then I obviously average out when we're getting up here, and then I just sell everything once we're in this red zone. So now we are slightly above the green territory. We did back here in 2015 peak above it and then fall back below it. Same thing back here, we peaked above it and then fell back below it in 2012 as well. And in 2019, we obviously cycled very, very high and then peaked right back below it in 2020 during the COVID scare. So now we are just starting to peak above it. So hopefully, what I think is that this will hopefully be something like this, and we'll have a nice move up before crashing back down, or potentially maybe at least something a little bit like this, to where we have a nice move up before we come back down. Next up, we have the RHODL ratio, and this is a little bit more accurate than the MVRV-Z score. Typically, when it hits the green, or when it goes into the green zone, that is usually more indicative of when the bottom is. You could see back here in 2019, we hit the green, and that was pretty much the bottom right when we hit it, and we stayed deep in the green even when we went sideways at pretty much what the bottom price was back in 2019. And then we hit the green back here in 2015 as well, and this was pretty much the bottom. It did keep on going down. The RHODL ratio kept on going down, even though the bottom was already in though. So typically it's like it hits the green and you want to get in. In this case, this year, it hit the green and the price was still 25,000 or 24,300. So not necessarily wanting to just go all in like that. But typically with this, it's like once it's in the green, I like to start averaging in. And that's basically what I've been doing, is, just averaging in once this hit the green. And we are just getting out of the green zone now, so fingers crossed things keep on going. But I mean, this is basically, we're in the green, so you average in, or I average in, not financial advice, but that's how I use this. And then obviously once it comes up here, I start averaging out, and if it gets fairly high, then I just sell everything. And so that is the RHODL ratio. And then next up, we have the Bitcoin rainbow chart. This I know is sort of like a meme at this point, because they added this new thing right here. I still like it because it does have this function to it, you could say, this technicality to it. We are in basically a fire sale. Well, actually, no. Right now we're in the buy zone. So right now we're in the buy zone. The basically fire sale zone was between $13,500 to $17,000. But yeah, I mean, obviously you could tell by the chart we're in the lower, one or two rings, the colors, and if it comes up here to the top top three colors, then you wanna get out. So this is a Bitcoin rainbow chart. And pretty telling, good time to buy. It just, overall, you could tell that this is a good time to buy, whether it's at 21,000, whether it's 20,000, 15,000, whatever. Typically, like, this is a good time to buy, not to go necessarily all in. It's a good opportunity to get Bitcoin cheaply, like historically, looking at things historically speaking. And then finally, we have the Bitcoin crypto fear and greed index. We're at 53 right now, neutral. Obviously, if this is 10, 5, whatever, I like to buy. If it's over 90, I like to scale out. This you have to use this with a grain of salt. You have to have context with this. So right now we're at 53, which doesn't mean anything. It's a wash for this particular indicator. But looking at all of the other indicators and also a lot of other things, it's obviously time to buy. It's obviously time to go long. It's obviously time to get into long positions because of everything that's going on contextually within the crypto market right now. So yeah, fear and greed index, nothing really to say right for that. And next up, we have the crypto total market cap. And this I made this a year ago. This is my chart. I basically plotted out really key levels. So I have the 2020/2021 yearly close and open. So December 2020 closed right here, and then 2021 opened right here. And then the 2018, this was obviously the top for 2018, back at just around, you could actually tell right here, $761.74 billion, right? So we tapped it, we shot up, we tapped it again, we consolidated a little bit, then we went up a tiny bit, triple tap. Oh man, this is a triple tap. So 1, 2, 3, and then an hour up. I was really waiting for the 88% because this is typically the institutional investors buying level is the 88%. So I really, really wanted to see a dip below the 2020, this level, this very major support level, because this was obviously a major support resistance level. It's the open and close of 2021. It was the high of 2018 or 2017. So this was a very obvious level, but I really did think that we were gonna just have a quick fall down to the 88%, and honestly, we still might. It's not out of the question. I do think, and actually, to be honest, I do think that we will see new lows in the market, but you have to play it, or you don't have to. But I'm playing level by level / current market sentiment and current market structure. And right now the market structure is bullish. So that's what I'm playing. And that's why I'm long right now. That's why I'm bullish right now. I'm very bullish right now. And I could be bullish all the way up to $45,000. But eventually I am going to turn bearish again. And I will not turn bullish until we either break the market structure even higher than 48K, or we come all the way back down to this level down here, and that's when I would want to get in for Bitcoin, for cryptocurrencies in general. And so that was that. And next up, we have the total to market cap. So this is the whole market cap excluding Bitcoin. And at this one, it hit the 78.6. Really loved the 78.6 level. Let's see if I could bring this back slightly. Pretty much the same thing. It wasn't the highs, but it was the close. It was the, is this the date? This is the weekly time frame. So it was the weekly time frame close back here in 2017, 2018, that this market cap other than Bitcoin, so everything except for Bitcoin, fell down to this level and consolidated and now shot up. And also I was thinking this one would come down to here as well. And this is where I would really want to just okay, I'm going into alts, I'm going to crypto, I'm going to Bitcoin, I'm going to alts, I'm going to all this, everything. I'm putting everything I have into it once it came down to this. But it hasn't come down to it yet. However, this is a market structure break. You could see that we are closing above this level right here, these weekly highs. So basically we have the low, we have the high, we have a higher low, we have a lower high, and then we made a lower low. So now that's a bearish trend. And then we made a lower high and then a lower low. So it continues the bearish trend. But now we're breaking that bearish trend by creating a higher high, the first higher high. So maybe it'll come back a little bit. I don't know if it will, but maybe it'll come back a little bit, make another higher high, come back a little bit, make a higher low, come back, go up, make a higher high, higher low, until it reaches a certain point where it falls back over and then potentially falls all the way back down here again. But right now, like I said, I'm playing it as if it is bullish, because it is bullish. Then we have the altcoin dominance levels. I used to use this religiously because it worked like a charm. You could see even back here, this was in September of 2021. and also May 2021. So first off, May 2021 most likely will retrace here. And obviously that in May 2021, that's when the market started crashing, right? And then again in January of 2022, actually December of 2021, sorry, it's really it hit my most likely retrace zone, and good area long alts again was down here in June 2022, and then again in September. So this I don't really use as much. I still look at it though, but so much money has flown into alts that it really I don't know, it doesn't hold as much weight, but it still obviously it still does work somewhat. You just have to use it with multiple different indicators and multiple different charts to really get the best picture. So that was altcoin dominance. Then we have, after altcoin dominance, Bitcoin dominance. So market cap, Bitcoin dominance percentage. And the overall market cap, how dominant Bitcoin is. So if Bitcoin is not very dominant, then you would expect Bitcoin to, you would expect money to flow into Bitcoin, more money to flow into Bitcoin. Or you would expect more money to leave alts compared to the money that is leaving Bitcoin. So either way, the dominance level of Bitcoin is going to go up, from this level. That's why when it hits this level, that's a good time to de-risk, because most likely money will be pulled out of the market from everywhere, but it'll be pulled out of the market from alts at a greater extent than Bitcoin, which is why the dominance level of Bitcoin will go up. Recently, money has been flowing back into the market, and it's been going into Bitcoin a lot more than altcoins. So you'd actually have been better off buying Bitcoin compared to a lot of altcoins, most altcoins, actually, which most people don't realize, because most people think like, oh, altcoins are the way. And yes, they are the way, but there's a time and a place. First comes Bitcoin, then Ethereum, then the macro caps and the micro caps. You don't want to necessarily do it exactly like that. You want to get into the microcaps before Bitcoin even, goes up and before it all starts, because you'll end up making greater gains. But right now we're seeing all the money flow into Bitcoin. So that's why Bitcoin is going up. And now it's reaching a fairly nice level. And what I want to do is I want to bring up a new chart. So let me just do that. Okay, so this is the chart for the Bitcoin dominance level, right? And you could see that we're in this range. Obviously, it's obvious range, right? So what happens is, as Bitcoin dominance moves up, more money flows into Bitcoin. And once it reaches, right now it's at the midpoint. And once it reaches the top right here, this is going to be the time that money flows from Bitcoin into altcoins, the greatest, right? When this happened, a lot of money flew into altcoins from Bitcoin. And so I'm still mostly in Bitcoin right now, but once we start heading up to this level up here, that's when I'm going to start wanting to get more heavily invested into altcoins, because once this turns around, altcoins will outperform Bitcoin. And the next one that I'm going to go over is the Ethereum against Bitcoin chart. This is actually a very, very telling chart. This is one reason how I called the top back in November of 2021. It's because this level right here was the 61.8 of the entire move from the top to the bottom. So I said once this was hit, that was a major resistance, and I'd want to sell at least 20% of my portfolio at this level. And of course, this was the top, and using the Ethereum against Bitcoin chart, I was able to sell a lot at the top and then buy back a lot June 13th. So this is major support, buying Ethereum here back in June 6th, June 13th, and then sell it again in September. So looking at the actual Ethereum chart, June 13th is right here. That was the actual low. So if I get rid of these things, June 13th was right here, right? And then let's see, when was September? September was right here. So that's basically buy here, sell here. This is the Ethereum against USD chart. And I base that off of the Ethereum against Bitcoin chart. So buy here, sell here. So it's pretty crazy how you could use the Ethereum against Bitcoin chart, or basically the Bitcoin pairings, and outperform Bitcoin and also catch the lows and get very close to the highs on the USD charts as well. So I definitely keep on looking at this chart. And once this comes down here again to 0.0553, I'm definitely going to be buying. I actually have a chart somewhere in here. If I go to ETH BTC. Okay, so now that it loaded, finally, you could see that I do have a couple things pointed out right here, and this is the main one. So remember I said 0.55. Well, not only does that line up with this major support right around here, right? It also lines up with the major support, the diagonal support from all the way back in 2019. So if it reaches this level, and also this is where the 200 MA, 200 EMA are. So this area, if it hits here, all into ETH, like no questions asked, because I really think that there will be a significant bounce from around this area. And I'm sort of just waiting for that. It's possible that it'll come down here and get a nice little bounce from 65151. But my real big buy, and when I really want to go into alts like super heavy, is down here. This right here, this chart is a counter argument to the fact that the bottom is in, or that it's alts are going to go up like crazy. It's because alts go up like crazy, and yeah, alts go up like crazy when this bottoms. Like when this chart is down here in this area, all of this area right here, this is when altcoins really moon. When it's up here, you have to be more cautious because altcoins don't really go crazy when it's up here. Although we're seeing a few things go crazy, like the AI coins went crazy, and now a lot of the Solana coins and Aptos and OP and some other ones are going crazy. But typically speaking, this is a much better area. Down here is a much better area to be going heavy into alts. So that is a counter argument to the fact that alts are going to go up significantly. And it's also a good thing to think about. And personally, what I'm thinking about is that I would probably want to stick with Bitcoin for the most part, stay in Bitcoin until this comes down here and reaches some sort of support. And then I'll go into Ethereum, and then I'll go into alts. So that is one thing that I do want to say about this chart right here. By the way, guys, if you're liking this content, if this content is informative to you, if you could please give this video a thumbs up and subscribe to the channel, I would really appreciate it. I'm trying to grow my channel really big in 2023. That's a goal of mine. So I would love it if you could do that if you haven't done so already. All right, let's get back to the video. Okay, so now let's go into Bitcoin. And in this analysis, I want to go over a few things. Number one is the time it took for Bitcoin to go from its high to its low in the previous two cycles. Also, I want to go over what the MACD looked like, what the RSI looked like, and what the moving averages were. So we're going to start off in Bitcoin back in 2014. There was a huge bull run in 2013, and it topped out around just over $1,000. From the top in 2013 down to the bottom in 2015, that was 406 days. And then we had a nice little rally, some consolidation, and then another rally, and then what looks like to be basically the same type of deal that happened in 2020, where we had this big move down followed by the true bull market. So if you count the top to the first bottom, that was 406 days. The top to the second bottom was 623 days. And that was back from 2013 to 2015. So now let's move on to the next bull market. Now, if we look at the second big rally that topped off in December of 2017, from the top of 2017 down to the bottom back in December of 2018, that was 364 days. And if you count from the top of the market in 2017 to the big COVID crash in 2020, that was 819 days. So now let's go and see what it was from November 2021 to right now. Well, if we look at from November of 2021, when Bitcoin peaked, to the current lows, that is 378 days. So The question is, will we do the same thing that we did in the last 2 cycles, go up and then come back down and either make a higher low or a lower low? Or is this truly the bottom? Personally, I'm thinking that the former will happen and that we will come up either to 25,000, just under 25, maybe 28 to 30,000, or maybe even all the way up to 45,000 and then fall all the way back down and make a lower low. That is my theory. That is what I'm thinking, because I think that not enough time has passed for there to be another true bull market rally. Not only that, but interest rates need to come down as well. Quantitative tightening needs to end and quantitative easing needs to begin, and other factors. And the Fed has to pivot, well, which is basically the same thing. And inflation needs to be down, and people need more money, and just a lot of factors need to come into play for there need to be a true bull market. However, this could easily be a bear market rally that takes us all the way up to 45K. And honestly, the way that I realize that, or the reason why I'm thinking that, is because the Fibonacci, if you take the Fibonacci from the top to the bottom, where does it line up? Well, it lines up right at $48,550. And if you take it from the close of the week instead of the the high, then that brings us to just over $45,000. And this right here has never been touched, and this is a very big resistance. So I'm thinking that that is possible. And if we actually come back to a previous cycle, you can see that there were big rallies. And if we take the Fibonacci from the, that's not the fib. If we take the Fibonacci from the top to the bottom, look at where the top ended up being on this bear market rally. This was the 61.8. So I'm thinking that we're going to have something similar. If we don't get up there, then maybe we'll get to the 38.2 or the 50. Now, one other thing that I want to mention is that if you look at this structure right here, we bottomed, we pumped a little bit, and then we made lower lows, lower highs, and then we had a big crash. And then we did some type of BART formation where we just simply shot all the way back up, right? So if you go back to 2019, this looks very, very similar to this, right? Like we came to a support, we bounced, we made lower highs, lower lows, and then we just crashed, went sideways, and then we basically just barred it up and we just went straight up, right? So if this is going to repeat itself, this is where we are right now. We're here. So we still should have some more room to go. And that is what I'm thinking is going to happen. So we have that. And now if we actually look at some indicators, we could see how they reacted in the past. So I want to look at the RSI, and I'm going to start back in the first bull run back from 2013 to 2015. And what I could see in the RSI is that there is a bullish divergence on the weekly time frame. So you could see that this is lower than this. However, the price is higher than here. Or said in another way, the price has become lower, but the RSI has made a higher low. And that is very indicative that there's a lot of strength coming back into the market. So we see this happen on the weekly time frame in the first bear / bull market of 2013 to 2015. And since then, since that happened, it was basically that was the bottom, and it just continued to go up from there. So let me just check and see if there's more of this happening, or see what happened in 2018, 2019. I could see right here, this is 2018. And if we bring the price down, you could see that, okay, well, there you go. This is very, very low. This is under 15 on the RSI. This is not a divergence, but it is extremely low. It's obvious. It has not gotten that low since the previous market bottom, right? So down here underneath, I'd say underneath 16, that tends to be the bottom, or that was the bottom back in 2015. And then that was the bottom back in 2018. And then the next time that it was that low was June of 2022. So that obviously, though, June wasn't the bottom. November was the bottom. So maybe this was supposed to be the bottom, and the FTX debacle basically shot us down even further. And this wasn't really supposed to happen, if you want to call it like that. Either way though, this was a really good time to buy, based solely off of the weekly RSI hitting the levels where it typically bottoms at. One other thing you can notice on the RSI going back to the first bull/bear cycle is that starting at the top, it would just keep on going down and making lower highs. And it was just in this overall downtrend. And then finally, you could see that it started to make an uptrend on the actual RSI itself. But the price was still pretty stagnant. It wasn't really going crazy like how it did, over here. But the RSI was getting higher and it was sustaining the higher levels. And that basically was the bottom of the bear market. And it was pretty much up only from there. And if we look at this one right here, it was just down, it was down. And then finally, right around here, is when it started to shoot up again, and basically it's above the 50 line and it starts looking really good. So if we look at what the price did right there, that was right around here. So this was $4,000 to $5,000, and the RSI just started, or not just started, the RSI picked up, and the RSI looked really, really good on the 2-week, and this was still a relatively low price for Bitcoin right here. Even though the RSI was pretty high, or was above the 50 line back in 2019, there was still plenty of room to go. And, just like I showed last time, there was still plenty of room to go. Even though the RSI went above the 50 line right here, there was still plenty of room to go for the bull market rally back in 2014, 2015. And now we're just above there, we just got above there. So we've been going lower and lower since 2021, basically, since the beginning of 2021. We did have this nice little rally back in October of 2021 as well. But basically from January or since October, we've been going down. And now finally we're above the 50 line. So that's usually a pretty good indicator, especially because it's, we went above the 50 line and then we broke back below it, and back in March of 2022. Now that we're back above it after this huge consolidation period, that's also pretty decent. And so there are a few things on the RSI that look pretty good. Now, along with the RSI, we could also take a look at the MACD. And so if I pull that up, you could see the MACD back here. So going back to the cycle of 2013, 2014, 2015, you could see that we had the MACD cross just a few months after the top, and it stayed underneath the MACD until May 2015, which wasn't the exact bottom, but it was a pretty good, still obviously a really great time to get in based just off of the MACD cross alone. And since that happened, basically it didn't cross again until September of 16, which was right here. And so even if you got out right there, maybe you got back in right here, which would have only been 22%, but still only been 22%, relatively low compared to the gains, because you could see after that cross to the upside again, it stayed up above all the way until, where is this? This is February of 2018, so just about 2 months into the bear market of 2018. And if we bring this like so, you could see that the MACD crossed right here. And so it's crossed and it stayed below all the way. It was below all the way this entire time until right here. You could see it crossed again. And it crossed back above on this move up. And after that, after this cross, it stayed above until this move down. So it was this move up, so right here, and then this move down had the, this move down right here had the cross below. So that's actually not that bad. That's still a gain. That's still a gain of 55 to 56%. And actually it didn't cross right there. It crossed right here, which means that it would be a gain of 60% plus, which is pretty solid, right? So there was that, and then it crossed back below, and it did not cross back above again, as you could see. Let me show you right there. It did not cross back above again until May 2020, which was right here. So this was the second cross back above. And after that happened, of course, this was at $9,600, and Bitcoin just went absolutely crazy after that. And we didn't have another cross to the downside until May of 2021, which was right here. So this one wasn't that good. The cross to the downside, I don't like how the cross to the downside happened all the way back here in May of 2021 after this huge candle. So the downside, I don't like that, but the upsides were really good, as you just saw. And finally, we did actually get another upside right here at $60,000, which obviously would have been terrible, but the downside happened right around 50. So yeah, I guess the downside right here would have been really good, because once this crossed down, it stayed below, it stayed below, it stayed below. And what do you know? We actually got the crossover. Wow, we actually got the crossover back in December, which was really, really good. So the crossovers, like I just mentioned, the crossovers up are really solid. Crossovers down, not as solid, but the crossovers up are really good. And this one actually did crossover up back in December. So that was a good sign to get into Bitcoin back then. And yeah, we're going to see, is this going to cross back down, or is this the bottom? Because this typically, the crossing on top, the cross up above, the green dots, typically denoted the bottom. The crosses above, typically, they didn't necessarily denote the tops, but the crosses below, yeah, this was the cross below, this was the cross below, and then there's a huge rally, cross below, cross above, huge rally, back here. Cross above, huge rally. Cross above, huge rally. So the crosses above on the 2-week MACD are actually really, really solid. The crosses below, that's not, the crosses downward, that the price already falls way too far to really take into account the prices when it falls downward. But the crosses above, really solid. So yeah, that's a whole nother reason. Maybe this was the bottom. You don't know. Like I mentioned, I don't think it was, but you have to look at the data, you have to look at the indicators, and that's what we're doing right now. And so I'm trying to give you all of these different aspects to it and then tell you what I'm thinking about it. And then finally, we have the CCI, which, as you can see, was going down, 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 finally bottomed out and then started to go higher and higher and higher. And that was a great time to get in back in 2015. And then again in 2017, down, 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 started going higher and higher and higher. And it basically printed that it was higher, getting higher right around here is when it started to get printing that it was going higher. And then even after this big thing, this was obviously in a very nice range right here, which was at right around $5,000, which was a great price to get in as well. Then also during the COVID crash, the same thing happened. And now if we look at it, you could see that it was going down, 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 and lower, lower, lower. And now finally it's actually starting to get higher and higher and higher, looking better and better and better. And we are at that point. Let me get rid of this. We are at that point of basically where the same thing that happened back here, same thing that happened over here, and where this is higher and it's making higher highs, higher lows, and so is the price. So those are just a few things that I'm looking at that I see, okay, well, these are all really bullish signs and it's data. I'm not just like saying, oh, I'm hoping that things are going to go up because I want them to go up. It's like, no, like the RSI, the MACD, the CCI, all of these things are looking fairly bullish, not to mention the fact that on the weekly time frame, there is a market structure break, which is the definition of an uptrend. So as you can see, we've been making lower highs, lower high, lower high, lower high, and just lows. The lows were equal, and then we made a lower low. Finally, we made a higher low right here. So that's phase one of the a bullish market structure break is a higher low, or not necessarily, but like phase one is basically usually a higher low. And then phase two is a higher high. And you can see that we made a higher high right here compared to this high right here. So that technically is a market structure break to the upside. So if we're looking at it like that, then we would make a higher high compared to the previous high, and then we would make a higher low. So whether we come down here, whether we just come down here, or whether we just literally hardly make any retrace at all, and then we just and we go up again, or we just do something like this, you know, hardly anything, it doesn't matter, because then we would eventually make a higher low, and our second higher low, which would mean that we made a low, a high, a higher low, a higher high, and then a higher low. And that would indicate that there is the bull run, or that there is a bullish market structure, and you would target a higher high after that, after a higher low is formed. So there's a lot of reasons technically to be bullish right now. That's why I am 100%. I have 100% of my position in Bitcoin right now, and I am looking at the altcoin pairs against Bitcoin. I mentioned this a little bit earlier in the stream. So I'm looking at, you know, Ethereum against BTC. I'm looking at Link against BTC. I'm looking at different cryptocurrencies against Bitcoin to see, okay, I think that Bitcoin is going to go up. Maybe I could get into something else that might go up more than Bitcoin. And if I could do that, then I will outperform Bitcoin and I'll make even more dollars. I'll make even more USD. So that's my game plan. I'm going over the different, and basically I just spent 3 hours going through all of the different cryptocurrencies that have the Bitcoin pairs on Coinbase. And I'm going to be going over and researching new cryptocurrencies to look at. I know that right now Aptos and Optimus, or OP, is doing very, very well right now. Those are newer coins. And so I'll have to check those out in a little bit more detail. But like I mentioned, I'm looking at the Bitcoin pairings because I'm in Bitcoin right now. And if I can make more money by going into alts, by trading my Bitcoin to altcoins, and then that pair goes up when Bitcoin is going up, that means I'm outperforming Bitcoin. And that's the goal. That's what I want to do. That's alpha. And that's the goal of that's going to be the goal of my hedge fund. That is the goal of my current public trading competition, my portfolio. And that's the goal of basically a lot of people, to be honest, like, is to collect more Bitcoin, like outperform Bitcoin, collect more Bitcoin. So that is what I'm doing right now. And I think with that, I'm going to end it. So thanks again for watching. Keep on stacking those sats and making those gains. And by the way, if you want to know what coins I'm personally trading, there is a link in the description below for my Discord group where I share all of that information. So if you want to follow along with all of my trades, link is down below. And with that, I'll see you in the next video.